Can Greece bear more austerity? Lenders pile the pressure on Athens as it plans its budget for next year. Fuel cell versus battery. Who will lead the charge in the world of electric cars? Hello and welcome. You with World Business Report. I'm Sally Bundock. Also in the programme, markets are digesting the latest words from the Federal Reserve. We'll get reaction from our team in Singapore. But first of all, does Greece need more austerity? Can it cope with any more? And does it even have a choice? Since 2010, the country's been kept afloat by 240 billion euros worth of bailout loans pledged by Europe and the International Monetary Fund. Now, in return, it's had to implement the harshest austerity seen in Europe in modern times. Painful spending and wage cuts and tax rises. Now, they've pushed Greece deeper into recession that's now in its sixth year, and unemployment, of course, is at a record of over 27%. And if you look at what every household is dealing with, average household incomes have gone down by an estimated 40%. And this week, tens of thousands of people marked the anniversary of the 1974 student uprising, which heralded the end of military rule with a massive anti-austerity protest in Athens and what many have called an economic dictatorship. Today, the government in Athens presents its budget for next year. Unofficially, international lenders have said it's still overspending to the tune of €2.5 billion. And Greece needs to make more cuts if it's to get the next loan instalment. Athens disputes that. Let's talk to our correspondent there, Mark Lowen. Hello, Mark. It's a difficult position to be in, isn't it, for the government, because it has to please its lenders, and yet clearly it's so hard for people in Greece. Can they take any more?
Such a gloomy picture, isn't it, Sally? Just listening to those figures in your introduction. Can Greece take any more? Well, the government says absolutely not. It is in a huge battle with its international lenders at the moment, the so-called Troika of the European Commission, the European Central Bank and the IMF, which have been in town for much delayed negotiations over that next 1 billion tranche of loan, €1 billion tranche of loan. They say that Greece faces a fiscal gap, a budget gap of around €2.5 billion next year, and might require, and probably would require, more austerity. The Greek government, though, says that that funding gap is smaller, just about €500 million, and can be filled through structural reforms and better tax collection. But the Troika is simply not convinced, because they say that structural reforms, privatisations have been so slow, tax evasion has been so rampant for so many years here. And so it is a huge impasse. So what's happened now is that the Troika has left Athens. Greece is going to present its budget today, but they will not get that €1 billion tranche of loan for some weeks to come, as the negotiations will continue into December and possibly January too.
And do we have any idea what's in the budget today? Has anything been leaked in advance, as sometimes is the case?
Well, there are some positive elements. That is to say that it foresees that Greece will come out of recession next year. That is a view shared by Greece and its international lenders, with very, very slight growth of 0.6% forecast. That there will be a primary budget surplus, which means that Greece will no longer be borrowing simply to pay its daily bills. It will only be in deficit to service its international debts. But apart from that, really, it is not a positive picture. And that is why Greece is still feeling very, very grim about the future, because you mentioned 6 years of recession, 3 or 4 years of austerity, unemployment of almost 28%, and among young people over 60%, and 1 in 4 below the poverty line. That is why Greece is still in such a dire situation. And even though the Greek government says that the worst is behind this country and that it is on course to balance its books, really still that optimism has not yet rubbed off on the majority of Greek people.
Very, very harsh reality. Thank you, Mark, keeping us up to date. And when we get news of what's in that budget today, we will fill you in. In the meantime, the US Federal Reserve is saying stimulus could be withdrawn in the world's largest economy in the coming months. So let's go live to our team in Singapore for market reaction in Asia. Ali Moore joins me now. Nice to see you, Ali. Whenever the Fed minutes are released or anything to do with the central bank in the States, there is movement in Asia. What's happening at the moment?
It's been an interesting day in Asia today, Sally. Most of the local markets have taken umbrage at what was said in those Federal Reserve minutes. Hong Kong, Korea, Australia, all down, with investors worrying about the prospect that one day they're going to wake up and there'll be no stimulus from the Fed, or at least a lot less than there is now. But not in Japan. The Nikkei has bucked the trend big time. It's actually hit a 6-month high. That's being put down to a couple of things. Foreigners buying more Japanese equities, plans by a really big government fund to invest more, and of course a weaker yen. The yen fell against the dollar in response to those minutes, and of course that's good for exporters. The likes of Honda and Sony and Nikon all did pretty well. Remembering, Sally, that just yesterday we saw Japanese exports record their biggest rise for 3 years.
And just briefly, Ali, what exactly did the minutes tell us? Because we all want to know when that move will be made.
It's like reading the tea leaves, isn't it? You know, given how this market, or all markets, swing on any hint of a time frame. But if you look at the minutes, the news is that Federal Reserve officials feel they can start scaling back their bond buying program in coming months. That is the quote, in coming months, provided it's warranted by economic growth. To be precise, they say that the data would prove consistent with the committee's outlook for ongoing improvement. That would warrant the trimming. It's a time frame of sorts. It's enough for the markets to start worrying again about the slowing of easy money. But Sally, it does seem we're getting closer to that point when tapering will actually start and we can all stop guessing.
All right, we shall watch and we shall see every single twist and turn. Thank you very much, Ali Moore in Singapore. Now to Tokyo, where the giants of the auto industry have gathered for the annual motor show, a key opportunity to show off their latest technology, and in particular, Toyota and Nissan, who've been squaring off over the future of electric cars, something called range anxiety. Now, I'd like to mention that it's a very important day for Janet Yellen. The US Senate Banking Committee is expected to approve her nomination, or at least President Obama's nomination, because she is his choice to be the next chair of the Federal Reserve. If approved by the panel, Ms. Yellen's candidacy then goes to the wider Senate, where it will need at least 60 votes. There are currently 55 Democratic or Democrat-affiliated senators. So let's show you those market boards. As Ali was mentioning, it's very much about the Fed and what they believe in terms of the US economy, its state, when should stimulus be withdrawn. But as she said, as Ali said, the Nikkei bucking the trend with the yen at a 2-month low versus the US dollar. This is the close in the United States. That's World Business Report. I'll see you soon for a look through the papers.